A whole host of consumer-facing stocks are all on our radar. We have the management of V2 Retail joining in. The stock's doing well this morning. Akash Agarwal, who's the whole-time director, joins in. Three main focus points: early festive season sales trends, the impact of GST cut on incremental sales, and finally on store expansion and margin targets that the company will give us as well. Akash, thank you so much for joining in. And that really is the first question. You know, when we saw the first quarter numbers, they were obviously impacted by a high base or the Eid shifting in the previous quarter. But like for like, same-store sales growth was close to around 10%. How has the second quarter fared, especially given the problems that we saw with rains and with the GST cuts? A lot of companies are facing some transition issues. So how has the second quarter fared for you? What is your revenue and same-store sales growth likely to be?
Yeah, hi, thanks for having me. So we have seen a consistent momentum in terms of same-store sales growth. And in terms of GST cut, I think it's too early to say because it's just been 6 days since the rollout. But all the indicators are pointing towards a very positive outlook. And third quarter is going to be very crucial because the next 3 months is the highest grossing quarter for us. So we will find out better in the next 3 months. But current festive trends, we are doing better than the guidance of 8 to 10% SSSG that we've given to the market.
Okay, all right. Could you tell us what is your pricing strategy, though, Akash? For say products that between 2,500 to 2,600 rupees, because now with the GST rationalization, you have an opportunity to adjust prices, such as to take advantage of that, and in turn, it would help you all in terms of growth. So, pricing strategy.
Yes, so we have already passed on the benefit to the consumers. We have already changed the MRPs for all the pending orders, as well as all the inventory at the store. But that contributes to only 6% of our total sales. Already 94% of what we sell is below the 1,000 rupee MRP. So we are not beneficiaries in terms of direct price cuts, but definitely in terms of customers having more disposable income and all the savings that they make spending on other products. So overall, the consumption should increase.
All right. You said that the second quarter same-store sales growth is similar to the first quarter. First quarter on a reported basis was 5%. Do you think the second quarter was that much, or are you looking at the 10% mark?
So that is because of the shift in Eid.
Yes.
So our guidance has always been 8 to 10% SSSG, and any double-digit SSSG on such a strong base is a very good number, and that is what we're targeting. And we are on track to deliver that.
And for the full year revenue, value growth would be what? Last year, obviously, you did closer to 1,900 crores on the top line. This year, what's the kind of revenue growth that you're targeting with double-digit SSSG?
So at least a 50% revenue growth is what we're targeting. And hopefully we deliver more than that.
Good to hear. You're sounding quite confident, Akash. What about store additions? Could you tell us what's the plan for this year? I think in quarter one, you added 27 stores. So for the year, what is the plan and outlook on margins?
So the initial plan was about 100 stores, but looking at all the positive response that we've got from all the newer stores and a very strong performance in the older stores. So I think we're going to open 120 to 130 stores this year.
Okay,
all right. That's aggressive. Just a couple of things. You had that enabling resolution for a 400 crore rupee QIP. Will that be put to use for store expansion? And by when do you hit the markets for this QIP?
So that is just an enabling resolution that has been done. Right now, we are busy with the festive season. The details and the decisions will be taken on that later.
Okay, all right. By when?
Again, like nothing has been finalized. It's just a board approval.
Okay. For the time being, it's a board approval. If the need arises, you'll go ahead and you'll use it. Is that correct?
Exactly.
Got it. All right. Give us a few more details. Net working capital days, it's come down a little bit. It was as is under 40 days. It's come down to around 34. What is the rough range you'd like to maintain?
So the net working capital should hover between 35 to 45 days because the inventory days that we target is about 90 to 100 and the average credit period that we get from our vendors is about 50 days. So this is what we're targeting. But if we are more efficient in the future and the sales per square feet increases in the future, then it might reduce by 5 to 7 days.
What is the sales per square feet target? Because first quarter was slightly under the 1,000 rupee mark. You have a guidance of 1,200 rupees for the full year of FY26. And by when do you reach the 1,400 mark? Because these are important milestones that you've spoken about in the past as well.
So 1200 is not the company average that we're targeting. That's the old store target. Because newer stores always start at about 70% of throughput of the old stores. And we're opening more than 100 stores this year. So for the company level, the target is to move to 1200 in the next 2 to 3 years.
All right, next 2 to 3 years. And what about margins? We didn't get that number from you. 50% revenue growth, 8 to 10% SSSG, 125 stores is what you're adding. Net working capital days between 35 to 45. Margins, how much will they be?
So we always talk about pre-Ind AS EBITDA margins because that's the relevant number for us. And it should be in the range of 8.5%.
Okay, final question before we let you go. Bihar elections. The next 45 days is going to be interesting on a political front. But for you all, for business, what does it mean? In the run-up to the elections, do you see increased demand? Or, how do things normally play out? And if you could give us your rough exposure to Bihar?
So historically, it's been a mixed batch. Sometimes there are a lot of disturbances that affects sales in the negative manner. And sometimes we see an increase in consumption. But overall, there's not much significant impact. And hopefully there are no disturbances in terms of sales. And the momentum can continue.
And what is your exposure to Bihar? How much of your sales come from there?
We have about 40 odd stores in Bihar. So it should be contributing anywhere between 25% of sales.
Okay. I like the way you put it, disturbances. I'm wondering whether it's based on the outcome or the party that's ahead. That'll be interesting. Bihar, always an interesting election. Well, we appreciate you joining in, Akash, giving us all these details. For the time being, you're sounding extremely confident about business, on growth, on store addition, as well as on the profitability front. We look forward to chatting up with you post-Diwali.
Yes, Nigel, and most importantly, I'll be looking forward to when the QIP happens as well, because if you look at their shareholding pattern from a domestic institutional fund, you have Motilal Oswal, which has been upping the stake in the company, and at some point they will hit that 10% ceiling level that will come by. So will there be other funds that join in and not, or something that we will be tracking very closely on V2 Retail? Has been a big gainer from a stock standpoint over the last 2 years or so. So we'll watch out for that. With that, we'll take